So now let's talk about why high interest rates have any impact on buyers and sellers. As a seller, a lot of people are watching this video thinking, well, this doesn't matter. I'm just going to go rent for a little while. I don't have to worry about this. Wrong. Your buyer's interest rate is the biggest really decider on how much money they can pay you. Let's assume that your home is actually worth $500,000, but the average buyer in your area can't afford a $500,000 home. It's going to take a really long time for your home to sell. And you might be thinking, well, what else can cause my buyer to afford my home besides interest rates? Well, they can get an increase in income. Their jobs can get better. But that takes a lot longer to happen. And so if you're thinking, well, what can happen over a 3 to 6 month period? It's usually your price can get cheaper or the interest rate can change. A lot of the time, buyers don't have a lot of control over their income. They're stuck for years at a time at a single income level or their double income for their family. And it's not something that they can just go out and fix. And so if the interest rate can go from 6.5% to 4% over a 1 to 2 year period, that can dramatically change the cost of a home. Let's take a look at the math. If we take a look at the median home price in Spokane, it's $425,000. Let's assume that a first-time home buyer is going to put 5% down. That's the minimum down on a conventional home loan. They're going to have around a $3,200 or $3,300 a month payment if the interest rate is 7%. If that interest rate drops to 6%, then that monthly payment goes down to $2,900. So it saves them almost $300 or $400 a month. That's a big deal for a lot of people. And sellers need to be aware that when interest rates are higher, your buyers have less money. And so you're likely going to be paying more in closing costs. A lot of your buyers right now especially are going to ask for seller contribution towards lender fees. And a lot of those contributions are going directly towards mortgage buy downs. That way they can afford the monthly payment. Because if their debt to income ratio is pushed too far, they'll get declined for the loan. And so a lot of buyers are pushing so far above their weight right now just to find something that's acceptable for their family that they're going to need seller contribution in order to get across the finish line. And sellers, if you're watching this video thinking, I don't want to pay someone to buy my house, okay, fine, then sit on market for a really long time and don't sell your house. You should contribute to buyers' closing costs if it is a victory for both parties and gets you closer to your bottom line.